Hi, this is Paul from globaltradingsoftware.com, and this is a tutorial video on how to use our xBrat opening range breakout indicator for Forex. So Forex, we use the 10-minute time frame. We have Euro US dollar on the 10-minute time frame today, and this is what's happened today. Just wanted to scooch out a little bit to show you that this was the gold pit open for New York, this current range that we have here, and this is the New York Stock Exchange open range here. So we go into today, we get the gold European pit open here. This is the range. It's colored in red, the tag is in red, so you're only looking for a short to break out that range, and look where the bottom of that range is as well. That's the New York gold pit open range as well. So we're looking for the short just underneath here. And our entry is very, very simple, just there. So entry short, breaking out of this range. It's told you the bias, you're only looking for a short trade. It's colored in red on the tag, and the range, the opening range, is colored in red as well. And so is the New York gold pit open range from yesterday. So we go short. This is now the New York Stock Exchange opening range from yesterday for the Euro US dollar. As you can see, we pushed down through there. Then we get the London open, and this is massive. That move down is huge. We move down, and again, this is the opening range for London. So if you wanted to trade short, you would trade short coming out here. But at 10 a.m. European time, with the European PMI, again, this is the opening range. It's colored in red, the tag. I've actually adjusted that manually by going into the settings, and I typed in Euro PMI because I know that was the data point today that I was really interested in, and just showed the labels and what the starting time was. Again, looking for that short to go through there, and we just look for the short to come out and keep going. So in these opportunities, if we've traded this gold European open, which you should do if you're a serious Forex trader, because that's the catalyst for the move up or down during that European session. So we get the short, we can add to it when it breaks the New York Stock Exchange opening range at this point here. We can add to the position when it breaks down, because we're told that the London is red, it's colored in red, so we're going for a short. Again, we get the big data point here. You want to tighten your stops just up above here at 15581, get the opening range, and then again, it's colored in red, the tag. The range is colored in red. We're only looking for shorts, and that's the way to go down. How do we manage this now? We use the manager, and I'll put the link in the description for the manager here as well, because that's important. We can see here on the manager we get this the bias cloud going in. We can change the settings on day trading moderate right now. We can see that we've had higher than average volume moves down. We're getting lower than average volume now as we're approaching sort of midday European time. We've got some US data coming out later. So the idea with this would be is just follow this cloud. We'd need to be around about here with a trailing stop, which is sensible because it's above all of this. And what we're looking for here is if we get two bullish candles on the manager, so this is the green is a bullish candle, so is the grey. If we get two bullish candles consecutively, either grey or green with the cyan dot above, that's higher than average volume, we take the aggressive entry out. At this moment in time, we had higher than average volume candle, a down candle on the London opening range. Then we had higher than average volume down. We had an up candle, but then a down. The cyan is down, higher than average volume. So there was no two consecutive bullish candles with higher than average volume. Now we're pulling back down again, so it's just a matter of waiting and allowing the manager to manage the trade for you, to tell you what to do. At this moment in time, we've got a trading stop locking in that profit from these great moves down, and all we've got to do now is just keep an eye on the manager. What's the volume doing? What it is? It's lower than average volume right now, so we're getting a little up candle. No need to panic. It's not higher than average volume. It's not an accumulation green candle, so we just have to be patient and wait for the price action to get pretty much close to where the US is at the next data point, and then just adjust the trailing stop below the just above the cloud for this short here. So very simple strategy. That xBrat range breakout strategy gives you the bias, what direction you should be trading that range breakout. And again, we use the 10 minutes on currencies. It labels it as well. You can put all the labels in for different data points, so you can trade those data points and those opening ranges, and it's a very great strategy. And then add on to that the manager to keep you in the trade and not to panic. You can maximize those profits for this particular trading strategy. Hopefully that helps, and I'll speak to you all really soon.